All right, welcome back to Stock Charts with Nick for this week's Midweek Movers live stream, sponsored by MarketSmith. MarketSmith is a trading platform that we'll be using to break down each of the stocks, the indexes, and the stocks on the watch list for today. So if you guys enjoy the MarketSmith platform, you can give them a try. There's a link in the description below. In today's live stream, like every week, we'll be going through just a general market outlook first, take a look at the S&P 500, NASDAQ, IWO, and ARKK, try to get a gauge on what's going on in the general market. Want to take a look at some of the bigger names, Google, Amazon, Tesla, Apple, stocks like that to see how the largest stocks and NVDA, the largest stocks in the industry and the market are holding up. Then we'll go through the 10 stocks that I have on my watch list going into tomorrow and going into the second half of the week. And after that, we'll break down any stocks that you guys want to see. So if you have any questions along the way, or if there's a stock on your watch list that you think is setting up well that I'm not covering in this live stream, please let me know, because I want to be ready for tomorrow's trading day or the trading days throughout the week as well. So if you guys enjoy the stream, please leave a like. It helps the YouTube algorithm push this out to more traders, and subscribe. I do this live stream on Tuesday night and then do a breakout watch list every Sunday. With that said, we'll get into the charts. First, we have S&P 500, SPY. What a difference the last 6 trading days could make. Last Monday, we had this down bar right here where we closed in the 14th percentile of the daily range, right at the previous low. Or no, sorry, for the QQQs, it was at the previous low, but relatively close to the previous low, from 410 to around 415, 1% or so from the previous low there. But below all the key moving averages, the 8, that's the green line here, the 21 EMAs, this pink line, and then we have the 50-day moving average, this red line, and the 200-day, the black line here. So it was below all of those moving averages. We were selling off on relatively high volume, higher than average volume recently, until this little mini bounce and then rolled again. Things were looking bad, no stocks were set up, and then we had a reversal on, was that Tuesday? Yeah, Tuesday. We had a Fed meeting on Wednesday where they actually did increase rates by just a quarter point, but it was kind of like, okay, now that this is out there, now that they're actually sticking to a plan, there's less uncertainty in the market. And at that point, the fear vanished, and we got 1, 2, 3, 4, kind of a rest day yesterday, and then today, within 6 days, 5 days, very, very strong, going from, let's see, where did we close here? We closed at 417, and now we're at right below 450, above all the key moving averages in basically a straight up line. Yesterday, kind of a rest day, but still closing flat on the day above all the key moving averages except for the 200-day. And today we opened above and attacked, pushed higher, up 1.16%, closing in the 78th percentile of the range, and just below 450 here. So obviously, this is an extremely strong move and what you want to see coming off the bottoms. If you look back at previous corrections, previous bear markets, a lot of them, did kind of get off the lows with this giant thrust, high volume, really rapid increase in price, back over key moving averages. But there's always going to be consolidation. So we're not just going to go straight up, take out 480, and then go to 500 here. I'm sure that's a possibility. But just like stocks didn't go straight down here, we got this bounce, pulled back again, another bounce, check, bounce. Just like the stocks weren't going straight down, we're not going to go straight up either. Yesterday we had that kind of quiet day, and then we had another move up. I expect either a quiet day or a little bit of a pullback down to the 50-day moving average on here to get going there. So that's SPY. Next we have QQQ. Similar story here, except for that Monday low did take out the previous low here. So new, like not all-time low, but low point in the pullback and the correction here. And then 1, 2, 3, 4, 5 days up, or 1, 2, 3, 4 days right up to the 50-day moving average, closing on Friday there. On Monday, we had not an inside candle, higher high, higher low, closing basically flat. I think it was down 0.4%. Yeah, 0.4% on Monday, yesterday. And then today, we opened up, took out that 50-day moving average, took out the previous high, and then closed in the 88th percentile of the daily range. So obviously, very strong move here. But one thing I want to point out, what I was looking at here is when you draw this diagonal from the previous low in here through where we stopped out the previous rally off the lows and then extending it further. Given that we've ran 12.5% in 6 trading days, we just jumped over the 50-day moving average. Again, 12.5% in just 6 trading days, so about 2% a day. This seems like a logical spot for the market to take a breather, relax a little, come in and just build kind of below or above the 50-day moving average. That would be ideal here. But just a couple quiet days where we can consolidate the gains. Short-term traders take their profit from this 12.5% run, and then we can really set up for a sustained move higher. Now, if we open up, say we gap up tomorrow, I would be looking to kind of increase my short position. I have a short hedge right now with TQQQ that I would be looking to increase on a gap up. But ideally, we get kind of a quiet pullback to that 50-day moving average. We stay above there, buying supports at that 50-day moving average, and then we push higher. But again, just because stocks don't go straight up or straight down, and they don't go straight up, 12.5% is an incredible move in 6 trading days. We don't expect that to continue for the next 6 trading days. That's QQQ. Next, we have IWO. This is a growth ETF. So a good way to kind of grasp how the growth stocks are acting in the market. Typically, I trade growth stocks. So when this is kind of cooperating in an uptrend or jumping off the lows on heavier volume, I usually have success in my own trading. So I kind of keep a track of this as well. This one put in triple bottom, which was nice to see, and then broke over all the 8 and the 21 EMAs a little bit earlier. Had been showing good relative strength throughout this pullback after kind of flushing a little bit earlier than the general market. But we got over the 50-day moving average. I think this was on Thursday, closed just above it, pushed higher on Friday, consolidation day on Monday with the low of the day bouncing at the 50-day moving average. And then we had slightly higher highs, higher lows, closing just under that 260 area. So similar to QQQ, I would love to see just a couple tight bars through here and then break out over 260. It's IWO. And then ARKK is the last one we'll cover in the general recap here. This one's still not holding up as well as the others. We're back over the 21, back over the 8-day EMA. Let's see here. What was the low? Went from around 52-ish, 52 to 67. Obviously, very nice jump there, but we're still not above the 50-day moving average. The 200-day is nowhere to be seen up here at 102. Again, we're at 67 there. So this ETF definitely has a lot of work to do. A couple other just general stocks I want to go over. Tesla, also similar to the QQQs, you could draw the line from this low to, or shoot, where was it? I might be thinking of a different chart. Never mind. But what you're looking here, you saw that, let me change this to the track price. Final flush here was on the 24th. We put in higher lows while the market was making lower lows. So as QQQ took out the low last Monday, Tesla was putting in a higher low. That was a good sign for growth stocks and the general market overall. And then we broke through the 8 and the 21 EMAs, continued higher, closed Friday right on the 50-day simple moving average. And then while the market was resting, Tesla put in higher highs and higher lows yesterday, up 1.74%. And then today, massive volume pushing through, closing just under 1,000. The high of the day was 997.86. And we have jumped from 753 up to 1,000. So about a 33% gain in just 6 trading days. That's massive. It's a great sign for the overall market, but it is a little bit short-term extended here. If we gap up over 1,000 and then fail at 1,000, that might be a potential area to take a short-term short. Again, I think the general market is showing its health, showing buying demand right now, but we're just getting a little bit ahead of ourselves. So if we gap up over 1,000, then fail at 1,000, potential short area there. Let's take a look at Apple. You can see the market health starting to shape up. Apple also over all the key moving averages. This was kind of the last larger name to lose the 200-day simple moving average on 3/14, and then this 6 straight days of higher highs, higher lows, above all those key moving averages. Great sign to see. Let's see, Apple, Google, same thing, breaking out over the 200-day simple moving average today, up 2.7% on decent volume, not above average of the last 50 days, but still decent there. If we pull back, then we have all 4 kind of key moving averages, the 8, the 21, the 50, and the 200-day. Now, if you switch the 8 for the 9, the 10-day EMA, the 20 for the 23, 20, 21, that's fine. We're just looking at very short duration, kind of short to medium duration, that 21, 23 EMA, the 50-day kind of middle duration, and then the long duration, the 200-day moving average. And if we pull back, we'd have all of those right around the same spot, a nice support area for the stock. That's Google. I'll go into NVIDIA in a little bit because it's going to be on the top 10 stocks that we're going to be watching for the upcoming week, or the rest of the week. But did want to just take a look at GameStop. Always fun to see. GameStop up 31%, and then I think it's up even more after hours. Last time I checked, it was at like 144. So if we gap up over 150, run into this 200-day simple moving average, and then lose 150, potential short there. But you're dealing with potential short squeeze here. Those are always kind of tough to manage your risk against. You got to keep very tight stops, and don't let it start working against you and really rallying, because we've seen if you don't use stops, what can happen when you get a short squeeze like this. So that's GameStop. AMC also up, I think 15.13% today, back above the 50-day moving average, closing nicely in the range, and is up big after hours. I don't have any of those stocks, but fun to look at. All right, 10 stocks that I'm looking at going into the second half of this week. The first one is AMD. Now I'll bring out the industry and sectors now that we're going over individual stocks. But this is in semiconductors, 102nd strongest group out of 197. So group strength C+, not super strong. It's got a B+ accumulation distribution, 94 overall composite rating. That's nice to see. Relative strength rating's at an 85. Ideally, that's in the 90s. But similar to what I was talking about with Google, where if we get a pullback on Google, we'll have all the key moving averages below it providing support. Right now, the only key moving average above the stock is the 50-day simple moving average, and I guess the 200-day as well. We closed slightly under it. You can see we're starting to tighten between kind of the shorter term duration moving averages that we've moved over, and then the longer term duration that we're fighting some overhead supply on, overhead resistance on. So if we do get that general market pullback in the next 2 days or so, kind of build out some tightening candles here, and then eventually breaking over the 50-day simple moving average is something that I would be interested in here. Earnings per share, so the fundamentals check, very strong. Earnings up 190, 250, 78, 77. Sales up 93, 99, 54, and 49 year over year for the last 4 quarters. And after-tax profit margins 19, 20, 21, and 23%. Let's go within that group. So again, C+ weaker group, but within the group, 6th strongest on relative strength basis, 8th out of 30 on accumulation distribution. So heavier volume days coming on up days versus down days, showing institutional demand instead of institutional selling for the stock. And then overall composite 5th out of 30 in that group. Fund ownership, we want to see that increasing, and we do, 26.33 to 31.27. Now we might see these numbers drop off once March numbers comes out. This is December 2021, so start of the new year was when this was over, and we did get some high volume selling here, so it wouldn't surprise me if some funds liquidated positions, but I guess we'll have to see come March. So that's AMD, looking for a little bit of consolidation, allow that 8 and the 21-day EMA to catch up. in that 50 and the 200 to kind of flatten out and then eventually break over the 50-day moving average with a little bit more gusto. Next, we have Bumble, and this was a stock that I traded today. Got stopped out for about 1.5% loss. Not too bad there, but I definitely want to put this back on the watch list. I think this is going to be kind of my main focus name along with one other that we'll cover in a second here. But Bumble, it's an internet and content, 149 out of 197. Weak group, or average accumulation distribution, B+, weak overall composite rating, and weak relative strength rating. So Nick, why are we talking about Bumble? It is this candle right here on 3/9. So they had earnings on March 9th, didn't report a negative earnings per share, but sales were up 26%, after-tax profit margin minus 5% year over year. But what did come with this was a move up 41.9%, so massive volume move up. We closed it in the 60th percentile of the daily range, so in the upper half. And this was the highest volume, I believe, ever. Let me check. Or since IPO. So that's 38,246. Yeah, so a little bit less than the IPO date. So highest volume since IPO. That's a changing character. From there, do I have the temporary pen up? No, I have tracking. Temporary. So we draw a line. That was terribly drawn. Let me PMBL. So from that area where we closed on that day, this was a potential entry down here. So the stock pulled back because of general market pressure. You could see S&P 500 was pulling back. This pulled back into the 8 and the 21 EMA. Then when the market pressure lifted, this got going, pushed very quickly up on Wednesday and Thursday last week. And then we had Friday, Monday, Tuesday, today, consolidating, building under this 30 entry point. So what I would be looking for is if we get another consolidation, or if we get a consolidation day in the market, or tomorrow or the next day, then breaking through on Friday, that $30 range, I'll be looking to size this up pretty nicely. Again, I did try to take the trade today. We'll show like a 5-minute candle on here. Just try to get in a little bit early in anticipation of that 30 move. So in case we had friction around 30, I wouldn't be getting nervous, getting stopped out, taking the trade off. Where was it? So eventually, I think it was right through here. I got in, it didn't break 30, came back a little bit. I was down on it, didn't break 30, and then it came back, and I cut it kind of close to the end of the day here. So a minor loss, 1.5%. Now, if this trade does work out and it gets up to 36, 20% move, or 33, 10% move, that far makes up for the loss. So that's the key, is keeping those losses very, very tight and then letting your winners run here. So break over 30, or if this comes in, test the 50-day simple moving average. That is at, the 50-day is at 26.98, call it $27. So if we pull back into 27.5, that area, on general market weakness as well, then we could play that with the stop under the 30-day, under the rising 8-day EMA, which is at 26.5. So we got about 2% in between those two. We'll keep an eye on that. That's Bumble, BMBL. Next, we have BRCC. So everyone's talking about Dutch Bros coffee. This is another coffee shop. Trades on less volume, very thin during the trading day. But one that is, let's go like a 15-minute candle. Really tightening up through here. It looked like it was trying to break out today, got over the $17 area through here. Had this nice volume bar, but eventually just kind of pulled back and some later day price action here. So what I would be looking for on this is just a break over today's high, or if we pull back into those moving averages, looking at it through there. So again, we're expecting kind of general market weakness in the next day or two. If this pulls back with that weakness, then we have the rising 8-day EMA and the 21 EMA beneath the stock. That's BRCC. Next we have GFS. This was a trade that I totally missed on. Right through here. Let me change it to, come on, temporary pen. Right through here would have been an ideal entry. It would have been day one of that rally. So on Monday's action, we pulled a little bit lower down. Down basically flat on the day. So the relative strength on this stock as the market was really deteriorating was popping out to me. We made higher highs, higher lows, higher lows, higher lows. Each time the market was making lower lows, lower lows, lower low, or up here, lower lows, lower low, lower low. That's a sign of relative strength. That means when everyone's selling the general market, the rest of the stocks in the market, for some reason they're not selling this one. And usually when the market pressure lifts, then we get lift off out of stocks that are showing relative strength. And you got that through this pivot, 59.52. Break through 60 was clean. Break through 65 was clean. You see the next day we opened right around 65, never broke that area, so buying pressure pushed it up. We did have some friction around $70. Same with 75, not clean. But now we're really starting to tighten up. You could just see this action here. So tight through here. So on general market weakness, pulling back into 70 could be a potential buy point, and then use your stop under the rising 8-day EMA there. Or if we have a couple of days weakness in the market and this just flags out really well, then a break over 75 is a potential entry point for GFS. Next we have a shipping, GNK. Shipping has been a very strong group, 14th strongest out of 197 right now. So A+ group strength, A accumulation distribution, 99 overall composite rating, 97 individual relative strength rating. Within the group, again, individual relative strength rating of 97. It's only the 11th strongest stock out of 28. That just shows you how strong the group is right now. So strong group in the cooperative market. I want to get some money into a stock that's setting up where I can still manage my risk, not just buying an extended stock in that group. But here you can see a nice cup with handle. MarketSmith does the job for you, labeling it a stage 1 cup and handle, 130 days, depth of 40%. Ideally, that's a little bit not as deep. A 30% pullback would be ideal here, but now we have just such a clean pivot to work with at $22. Just looking for a break over 22 here. We had a nice rest day, down, what was this, 0.5% today on lighter than average volume. So break over 22. We can take a look at the fundamentals as well. That helps add probability to our trade. There's no absolutes in trading. You'll hear me say this a lot. There's no absolutes, but we're trying to build as much probability on our side as possible. One way you can do that is with technicals. One is with fundamentals, and then your entry and exit points. So fundamentally, earnings per share were up 137, 274, over 1,000%, and then 805% year over year. Sales went from minus 11 to plus 63, plus 77, plus 92. And then after-tax profit margin went from plus 3, plus 27, plus 40, and plus 46. So absolutely ideal fundamentals. Group strength. Fund ownership also increasing from 156 December of 2020 to 287 this past December. So again, just looking for a break over 22 for GNK. We're halfway through the 10 stocks that I'll be covering. So if you guys have any stocks that you want to see, drop them in the chat. We'll go over as many as we can within the hour. And if you're not yet subscribed, please do so and like the video. Just takes 1 second to just click like. All right, next we have GTLB. This is another one of those kind of high volume moves off the low, similar to Bumble, that are catching my eye. We'll go over 2 more of those later on, the last 2 stocks that I'll cover. But this is in computer tech services, so C- group strength, 139 out of 197. B+ accumulation distribution, weak composite rating at 29, weak relative strength rating. We have only 1 quarter to work with since it IPO'd on, what day was this? IPO'd October 14th, And since then, we had a little run up to 137 from around 100, so a 37% move. And then we flushed with a little bit before the general market, but then also the general market pressure pushed this lower, under 40, eventually bottoming at 3074. So very deep base. Ideally, the stock doesn't pull back that much. So that's one strike against it. If we're talking probabilities, trying to stack as much probability on our side, that is definitely a probability working against us. There's a decent amount of overhead supply against our potential entry point here. So, but we get nice volume move off the lows here, break over 60. We pull back. In the last 2 days, we couldn't close over the 50-day moving average and couldn't close over 60. But what you would notice if you look at the daily chart, the low of the day here, 55.06. Previous day, yesterday, the low of the day, 56.51. So we're building respect for 55. If the general market comes in tomorrow and 55 can hold again, that would be an area to start a position and then keep your stop loss 54 and 80, 54, 74. Somewhere a decent amount or a little bit under 55, but not like 54 and 99. I've seen too many stops get hit with that area. But we respected 55 today. If the general market pressure brings us down again and we could kind of stay around that 55 area, that's going to be something I'm watching. On market strength, a break over 60 is a potential entry point for GTLB. NVDA, now we get back to one of the larger stocks, and I didn't cover this in the beginning because I wanted to cover it now. NVIDIA was one of the true market leaders of 2021. If we look at a weekly chart here, in 2020, obviously it was a really nice mover, but then also when a lot of growth stocks were flushing lower, this pulled back a little bit in March, 150 to 112. That's pretty deep, actually. Oh, wait. Here, let's just check the cup. Depth, 25%. But then had a really nice appreciation in price with a couple of nice entry points throughout the year in 2021. So true market leader in 2021. And then we start topping here. We had this heavy volume day when it was up 12%. That was kind of a warning sign. We were getting really extended from the 200-day moving average. One thing I like about MarketSmith is it shows you, I pointed at my laptop like you could see, but below it shows you where the 200-day moving average is at that time, and you can see it was the price of the stock was 67.5% above the 200-day moving average after this heavy volume 12% move already extending. That's kind of a warning sign. Now it did make a new high from there to 346, but that was your kind of first, like, this stock is getting ahead of itself. The market's getting a little bit ahead of itself. We might be in for either just a general market pullback, correction, bear market, whatever it is to be. So that was kind of a caution sign. And then when it actually topped, that was a huge red flag because we had pretty good volume above the 50-day moving average on volume. And then we closed right at the low of the day after trying to really move forward, and then eventually it fell apart. After it fell apart, it did put in, a lower low the first time through on March 8th, but then put in a higher low more recently when the market was putting in its absolute low. And then, just like every other stock, broke through the 8, the 21, the 200-day, stopped on the 50-day, then pushed through it on Friday or Thursday. This is massive volume, clean moves through all the key moving averages through 250, and now we're stalling a little bit below 270. Ideally, if the market comes in and this pulls back to 250, you have the 8-day EMA. A rising 21 will be around 247-ish at that time. Maybe not that quickly, but what I'm looking for is a pullback and then build a position with my stop under this 250 area. So I don't want to buy it here at 267. That's a little bit extended. Again, the general market's extended in the short term. This stock is extended in the short term. We want to be patient. Stocks don't always go up, contrary to the thumbnail. stocks will come back, they'll consolidate, volume will lighten up, and then we'll find more entry points. If this is going to be a true market leader in 2022 like it was in 2021, there were multiple entry points to get in, so we don't need to rush ourselves. But in a weaker group right now, C plus group strength, but within that group, it's number 3 on relative strength, 3 on accumulation distribution, and 3 on overall composite. It's got a relative strength rating of 94, composite rating 97, accumulation distribution A minus, checking a lot of the boxes here. Strong fundamentals, earnings per share were around 70% year over year growth the last 4 quarters. Sales 86, 68, 50, 53. After-tax profit margins improving by 40% year over year, and fund ownership increasing. So it checks all the boxes. We just need to be a little bit patient, either allow it to come back to 250 or continue to build here. And then as the market goes through kind of a pullback or just chop sideways a little bit, and then we get that move higher, then a break over 270 would make sense. If the market just extends tomorrow and this breaks over 270, I don't want to be chasing. Because really, what are we expecting? Are we expecting another day up to 280? That would be nice. But then are we going to expect a pullback? Or are we expecting to move to like 300? So where can you manage your risk where you have good risk reward, you're not chasing a stock, and you bring in what the general market is doing into your equation as well? That's NVIDIA. Next we have ON, and I do have a position in the stock, only about, what would that be? A little bit less than 10%, maybe 8% of my total portfolio in here. What I was looking at, temporary line, was just a break over this downtrend, and we got over it a little bit, but closed slightly below my entry point, so I'm down, I think, like $12 on the name at this point. I'd love to see this come into 60. You see the 21 and the 8 and the 50-day moving average, 3 major moving averages, all around a nice round number, 60. So lots of support through here. So if we come back, right now my stop's at 59.70. If we come back into 60 with the general market pressuring down, then I'll be looking to add to my position. And then as the general market lifts that pressure, if it does, I could get stopped out. That's totally fine. Taking losses is very important. But if we do get this kind of pullback in the general market and then pressure lifting, and the stock pulls back to 60 and then the pressure lifts, I want to be building a position just above 60 where I can manage my risk at like 59.50, 59.49, something like that. Similar to AMD and NVIDIA, it's in a general semiconductor group, 71 out of 197. B group strength rating, B accumulation distribution, 96 relative strength or composite rating, 94 relative strength. Whenever we get 290s, composite and relative strength individual, I want to have that on a watch list. Very strong fundamentals, 250, 425, 222, 211 earnings per share growth year over year. Sales up 13, 40, 32, and 28, and after-tax profit margin increasing 10, 17, 22, and 26. Fund ownership on this is increasing, and within the group, it's 4th out of 44 on relative strength, 12 on accumulation distribution, and number 1 on composite. So this is what I'm looking for. General market pullback, stock pulls back to 60, and then as pressure lifts in the market, we break through this downtrend line with more gusto. I do want to see 60 hold. If that doesn't hold, I'll likely be stopped out at 59.70. But if I could build a position between this downtrend line and 60 these next couple days, I believe that it's a high probability setup. There's a lot of things working in my favor. Does it mean that it has to be a winning trade? Absolutely not. Either the market could pull back more than I'm expecting, the general market. The stock individually could just fall apart. Either way, I have my stop. I have my line in the sand. If I'm wrong small. I'm wrong controlled. But if I'm right, this is a stock that always held over the 200-day moving average. Sign of relative strength. Broke over all the key moving averages. Has a nice downtrend and a clean stop loss to work with. Next, we have S. It's in computer software, 78 out of 197. This is another one of those HVE setups, highest volume ever. I just want to make sure that that is true here. Part of this highest volume ever did come on Friday. Highest volume ever on Friday. That was also quad witching. I understand that brings in more volume than typical, so kind of a little asterisk on that HVE. But a lot of things set up, or a lot of edges set up in this trade. I didn't take it today, kind of kicking myself, but it should give me another entry if the general market pulls in a little bit. But so we had this highest volume close here at 40.57. We had a nice round number of 40 to work with, and we had the 50-day simple moving average downtrending. So a break over 40, break over the 50-day moving average, and that high volume close could have been an entry point. Again, I didn't take it because we'll cover the next stock that I did enter. But really nice move today, up 7.25%. What I'm looking for on the outside, if you're already in the stock at 40, great job. What I'm looking for is with that general market pulling back, if it does pull back, doesn't have to, that's just what I wish it would do. If that general market pulls back, this pulls back into the 50-day, into 40, into that HVC high volume close, then I can build a position against that area, put a stop, say at like 39.40 or something, 1% or 2 under $40 there. So the closer I can get to $40 as my entry point, the closer or the smaller the distance between my entry and my stop loss, meaning I can size it up more with keeping the same amount of capital risk. So go back and say you want to take 1% capital risk with any given trade, right? So that doesn't mean like you're only putting in 1% of your capital in a single trade. It means say you take 10% of your total account, you put it in the trade, and then you have a stop loss 10% under your entry point. 10% capital, 10% your stop loss, that's 1% of your total capital. Now if you have a 5% stop, you can use a 20% of your account position size, and that's still a 1% risk to your overall capital. And if we can keep that stop at 2.5, then you could size it up and up 1% risk. You theoretically could put 100% of your account in. I would struggle mentally doing that, but I know traders who can. So we want to keep stops as small as possible. We want to add as much edges to our trade as possible. So pull back into 40. Let's see how that acts for S. And the one that I did take was STNE. This looks terrible, right? Stage 4 downtrend. Nick, why would you ever cover this? It's because of that highest volume ever on March 18th with a strong closing range, 86th percentile there, with massive volume, 70 million shares traded that day. It's really kind of hard to see here. Let me go to like a 15-minute candle. So where did we close? It was like 1352 was the close on this day. Right around here, whatever. Sorry, let me just check that. I want to get it right. Close, 1365, sorry. So closed on this day right here, 1365. That was my entry point today when we broke over 1365. Took about a 25% position size on this, and the best trades work immediately, and this worked immediately. This candle that I got in was up 5.8% with an 88% closing range. We had continuation the next 15 minutes, and then since then it just pulled in a little bit, looked like it was bouncing, and then kind of died at the end of the day, which may be a little bit concerning. When we did fail at 15, so we broke over 15, 1501, wasn't clean through there. I took 1/3 of the position off, so a nice gain, booked that, and now we're looking, if we come back into either 14 or that 1365, I may look to add back to that position if we see that area getting supported. I don't want to be the first one buying, just randomly on the way down, but if we trickle down and then bounce, I'll be looking to kind of put that 1/3 of the position back on. So really strong move when the market was cooperating, and then we just consolidated a little bit. One downside to this is obviously the overhead supply on the name. Could make it a little bit tricky. And I think Greg on Twitter mentioned that the 65-day EMA was right where we stopped out, right around $15. So if we could build between 15 and that 1365, that high volume close area over the next couple days, and then break over 15, that could be a potential entry point as well for STNE. All right, those are the stocks that I wanted to cover. So let's get to what you guys want to see. Good morning from Malaysia. Good morning. It's awesome that you guys tune in from all across the world. Hope you're having a great morning. Seems like a lot of VCP setups in this correction are starting to form. True. And the more time that we get corrections, the more time that the next true market leaders have to kind of show their hand a little bit. We're talking the stock showing or putting in higher lows, higher lows, higher lows, while the market was putting in lower lows, like GFS. Higher or initial low, then higher low, nice tight action, beautiful breakout. So with more time that we spent in correction, the more time we had to see what we're going to be like the next batch of leaders. AOSL is another one that I have kind of on a general watch list, a little bit extended here, but we pulled back twice into 55. I didn't have the guts to put the position on at 55 because I didn't have much gains to risk, so I wanted to risk profit on more of a pullback to a round number instead of buying a breakout. So I didn't take this, but if we can kind of pull back into 60, that's an area that I'm watching. Let's see, DAC, shipping company. Finally, clean break over 100, pulled back, low of the day. Yesterday was 101.06, right on that rising 8-day EMA, all good things. Consolidating nicely here. If the general market pulls in, then we want to watch that $100 area as potential support. Maybe the 21 EMA catches up to it in the next week or so. But doing all the right things, it's in that transportation shipping. That's 14th strongest group in the market. Like I covered with GNK. GNK is definitely, so in that shipping group, I would say ZIM, obvious leader, but extended. DAC, kind of silver medalist here, and then GNK is the bronze. But the bronze has a nice clean entry point right now where we can manage our risk against. So if ZIM pulls in and starts to tighten up, kind of like it did through 60, they just had a special dividend, so that's what's throwing me off about the price. But if ZIM can pull back, tighten up, that would be my first stock that I want to look at in the group. Then DAC, then GNK. But DAC doing all the right things. Let's see, ZIM, we just covered that. Grin is also shipping. Is LXU? Yeah, this is getting a little bit extended to me. Went from $5 to 23 since July of 2020. I mean, even in here, from 12 to 20, basically doubled here. This could be a high tight flag in the making, but we need it to flag out, give us a lower risk entry point. Up here, it's just so far extended. I don't want to be taking a new position up here because you very much risk just a general market pullback, and then you're getting stopped out at a 3% stop, a 5% stop, something like that. So really strong name, really strong move, strong group. Chemicals and agriculture, 5th strongest out of 197. 99 composite, 99 relative strength, checks all the boxes, just extended in the short term. Now, if you're already in the name from lower, I mean, it's doing all the right things. So just because it's extended doesn't mean it can't get more extended. But entering a new trade, you got to think about risk reward. Where are you putting your stop so you can size up the position and really get that bump in your year-to-date performance. And a stock extended like this, I can't take a very large position size because my stop is going to have to be so small to get good risk reward on it. So Airbnb, NRT next. Nice move today. Oil and gas, 8.9%. Beautiful, beautiful action. Let's see if it pulls back, kind of builds over 14. I don't have a position in this, so, but doing all the right things. Kind of bounced twice at 12. Nice to see. Just let it flag out a little bit. Airbnb. On my watch list of so I have my general world watch list, which is about 500 stocks at this point. It's all the stocks above their 200-day moving average, and then some other criteria I put in there. And then I narrow that down to a group of maybe 50 to 70 stocks that I want to just keep tabs on. And then from there, I go into the daily watch list and focus list. And this is kind of in the list of 50 stocks. Broke back over all the key moving averages. On Monday, finally broke over that 200-day, over 160. We pulled in a little bit, broke under 160, so that 160 area isn't clean for support. Maybe 155 is a better area. Or if we can build for a couple days, then a potential trade here. But I mean, Airbnb's, it's really all over the place. Hard to manage your risk, even when you get in. I traded this through this area. It's very choppy, so needs a little bit of time where you can find a true entry point. Let's see, and John Deere. Yeah, John Deere. I mean, look at this base. Beautiful, beautiful. Little shakeout here, and then going. See the weekly chart. Look at this. So each of these candles are 1 week. We had that 2020 run, consolidate, 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 shakeout, boom, going. Beautiful. I don't have a position in it, but it's doing all the right things. If we pull back into 410 area, that 8-day EMA, maybe I'll take a look at it. Not like a typical name that I would trade, but for long-term position holding, I mean, this is exactly the base you're looking for, and we're breaking out, making new highs before the general market, well before the general market makes new highs. So great action out of John Deere. Let's see, EURN. I've not heard of this one. Oil and gas, that is tightening up. Average daily volume, 1.6 million, that's good enough. I am writing this down. Thanks for bringing this up. That's EURN. So we went from 8 to 12, 50% gain there, pulled back, never broke 10, and now we're really tightening up the last 1, 2, 3, 4 trading days, building under 11. So potential entry, break over 11, stop 1050, 1049, 5% or so. Yeah, it doesn't have any of the fundamentals. I don't think many of those oil and gas companies do, though. 92 relative strength. There are stronger oil and gas companies out there, so let's check those. So Fling, a little too thin. ENLC. Let me write that one down too. ENLC. That looks interesting, right? Pulled back, 50 days, simple moving average support, bounced up, holding over all the key moving averages now. Nice pivot to work with at 915. Nice relative strength in a strong group, a little bit stronger fundamentals. Fund ownership a little stagnant. That's a little extended, maybe a pull into 20. Too thin. Not bad. Yeah, so if we can find the strongest stock in the group, that increases our odds of the trade. So you'll see me do that a lot when I see like a brand new stock like EURN. I hadn't seen that before. Don't know why it didn't come up, but then I go view stocks in industry, and then I just go through the list there, see if any other names pop up. SII, investment managing. This is interesting as well. Canada-based company that offers. Good fundamentals. Okay group, C+. A minus accumulation distribution, 92 composite, 88 relative strength. Let me check a weekly chart on this. Higher low, higher low, higher low. Building. I like it. How many? But only 140,000 shares traded. So if things go bad, it gets tough to get out of quickly. And it can just be whipsawed a little bit more. Like a stock like NVDA is going to be a little bit more controlled move. It's going to respect moving averages better, round numbers a little bit better, where something with only 140,000 shares traded a day can really, really whip back and forth. Coles, I believe they're getting, let's check the news here, because I think they were supposed to get acquired. Am I wrong about that? I'm not going to look into it. We have 8 minutes left. But I believe I saw something about Kohl's getting acquired. So take a look into that. But great chart. Really, really like this kind of inverse head and shoulders and the base setting up. So if it isn't getting acquired, I like the setup. Doing all the right things. Volume drying up right around the high here. Work with that 65 pivot. WMP. Mining, 15th strongest group out of 197. A+ group strength rating, 90 composite, 89 individual relative strength. Let's check. Not too much overhead supply there, and pretty long time ago, or yes, last year. Really building out here. Kind of choppy action though, like not very clean. If I'm going to use a 3% stop, I'll probably get stopped out of this name. Well, I guess it's 50 to 45. This is 10%. So maybe not, but not super stoked about that. I think gold is setting up relatively well. A little bit tighter action. Maybe not. I need to do the measuring on this, but BMO, banks. Yeah, I don't trade banks personally, so I mean, it's making new highs, doing all the right things. I don't trade banks. I'd rather just sit out the market. They don't typically move very fast. I'd rather sit out the market, wait for the conditions to improve, and then go heavy on a potential breakout, something that I can manage my risk against. And I just don't study how bank stocks move, so I don't trade them. AVGO. Yeah, this is one that's been on my kind of top 50 watch list. Showed good relative strength throughout this. Higher low, consolidating, have all three moving averages, the 8, 21, 50, right at the same price. We break over that area and then broke under 600, 599.33 today. Ideally, we start showing respect for 600, not these kind of undercuts, but definitely tradable through 615. The market pulls back and then this pulls back to 600, maybe a little under, allow that 21 EMA to catch up, and then we break over the 615 area. That's more of a potential entry for me. I don't have the guts to chase the extended stocks. That's fine. I mean, look at how many opportunities we got in 2020, how many opportunities we got in 2021. If the market is going to be strong, we're going to have multiple opportunities to get in. And if it's not going to be strong, well, then you don't want to buy right here. So always err on the side of patience, because you can deal with not making money, right? Because when the market environment is right, when your strategy is right, then you can start really pressing on the gas. But if you don't buy off the lows, or if this kind of type of move wasn't part of your strategy, you want more of a VCP, volatility contraction pattern, into your setups, that's perfectly fine. Master the type of trading that you're trying to trade. You'll be much better doing that than trying to chase 10 different strategies. So no FOMO. ENB, oil and gas, this is strong. Holding over 45, right? Respect for 45. Today's low was 45.01. Yesterday's low 44.91. Not quite respect there. Low volume today, flat. Yeah, I think ENB. I have this name on my top 50 list. I don't know why I didn't have it on the daily watch list today. I'm glad you guys are bringing these up because for some reason some of these are falling through when I'm scanning through the stocks. This one looks great. Either manage risk with an entry around 45 and then stop under the 40 or the 8-day EMA. I mean, that's pretty tight too. That's 1% right there. 1% risk at 45 at an entry of 45. I mean, 2% is almost the 21 EMA. So nice and tight action there. I don't think this moves as quickly then. Yeah, as other oil and gas. Maybe that's why I didn't have it. It's ENB, CNCX, CNXC, sorry. A little bit thinner, so 280,000 shares traded, but holding up really well. A little shakeout, higher low, tightening up right around that $200 area. Low of the day, 199.36. Does have earnings in 7 days. So maybe, again, market pulls in. That's what I'm thinking will happen. If market pulls into the 21 EMA and then we get a run up into earnings, that could be potentially tradable. But 7 days, that's kind of like right on the border of like how far away I want to be trading with earnings. And then LAC, this was on the breakout watch list going into the week. It was on my focus list on Monday. Really frustrating because I had this on every alert. Just did not pull the trigger on this entry. Low of the day on Monday, what was it? Low of the day was 28.03. We opened right at the close, basically, of the previous day, and then just took off. Continuation today with, look at these daily bars on the volume. Over the 50-day moving average on volume. Closing in the upper half of the daily range on both days. Really strong action. Hurts me to look at this chart because I completely whiffed on it. That's LAC, looking great if you're in it already. Otherwise, I'm waiting for a pullback into this $30 area because LAC, if you study the character on it, it does go through these extensions and then we pull back, extension, pullback, extension, pullback. So again, no FOMO. Let's let it rest a little bit and manage our risk. Minimum volume I look for is 400,000 shares traded. That's like the minimum on my scan to get into the world of stocks that I'm interested in trading. But typically around 1 million, I would like, I think ON has a little bit less. Oh no, that has 7 million. Around 1 million minimum would just improve your odds, make it a little bit more liquid. But no less than 400,000. Just for me, you could trade it with a smaller account. It's not going to be as tough, but I'm kind of trying to practice looking for the types of setups in the types of large liquid names that I would trade when I do have like a much larger account as well. So I'm right about the Kohl's buyout. All right, cool. Exit point on LAC. If you're in it already, go back and what is your average gain over the last 10 winning trades? When you study that, then you could see, okay, then I should say 5%. Your average gain of the last 10 winning trades is 5%. Then when you go and the stock's up 5%, take some off. Then you would know at least you're locking in profit at your average gain. And when you get continuation, then you can start bumping that average gain on a winning trade higher. as the market conditions improve. So then when we do get really strong markets, you'll be building up that average gain and then taking profits at wider and wider ranges there. So go back, look at your last 5 trades, last 10 winning trades. What's your average gain on that? And then try and lock in some profits there. That's kind of exactly what I did with STNE. Let's go to the 15-minute chart. So along the same lines of, so kind of 2 things here. We failed at 15, and this was, I think it was like 7.5%. And that's been my average gain on more of like the swing trades that I've been trading. So took 1/3 off there, and then my stops in the money, or right at the money there. All right, that is going to be the Midweek Movers live stream sponsored by MarketSmith. That's the trading platform that we've been using all day today. So if you guys enjoy MarketSmith, there's a link in the description below. Give that a try. You can try it out 3 weeks for just $20. Make sure you leave a like on this video. Help me out if you guys enjoyed it, and subscribe to the channel. I do this live stream on Tuesday, and then a breakout watch list of the 10 stocks that I'm watching on